Hi guys, welcome to All In Crypto, a brand new channel where we go all in on crypto. Today's video is going to be about how we store our money. Most of us store our money in a bank, and for a long time this was the safest and most sensible way to store our money. Well, it isn't. And the reason for that is inflation. Since 2007, global central banks have been doing something called quantitative easing, or QE. QE is a very complicated way to say money printing. Global central banks began doing this in 2007 as in the aftermath of the global financial crisis. They did this to get the economy moving again and to save the banks who were in a very bad position at the time. The US Federal Reserve, which is the world's largest central bank, printed around $700 billion in the years following the financial crisis. And for a long time, it was working. The economy was growing, the stock market was up, inflation was down, everyone was happy. What changed? COVID. When COVID struck out of the blue, global central banks began conducting QE at unprecedented levels. The US Federal Reserve printed $3 trillion in 2020. Can you believe that 40% of all dollars ever created were created in 2020? What does that mean for us? It means that with many more dollars, euros, yen, dirhams in circulation, the value of each unit of that currency has gone down. We know this, guys, from Economics 101. As the supply of something goes up, its value goes down. Every central bank has been doing the same thing, and it has led to chronic inflation. We saw last week that the US released that inflation from June 2020 to June 2021 was 5.4%. Now, this was a very big number, much higher than a lot of people were expecting, which means that the cost of your essential items like food, petrol, clothing has gone up by 5.4%, which is already bad enough. But this number does not include the effect of the increase of money supply. If we take that into account, the real inflation number is more like 30%. Which means unless your salary has gone up by 30% in that year, you're worse off than the year before. The way around this, guys, is to take your money out of banks and out of cash, which is an inflationary asset, and into something which cannot be increased at a moment's notice. And that asset, guys, is Bitcoin. Bitcoin has a fixed supply of 21 million. No more than 21 million Bitcoin can ever exist. We know this because it's hard-coded into Bitcoin's algorithm. That means Bitcoin is a deflationary asset. Compare that to fiat currency, which is any normal currency we use like dollars, euros, and pounds. These currencies can be inflated at a moment's notice and inflated to huge proportions. Keeping your money in these currencies is a recipe for disaster. Each year, the value of your currencies is going down and the price of living is going up. By putting your money into Bitcoin, guys, you are exposing yourself to the huge price increases that Bitcoin continues to see. For example, from April 2020 to April 2021, Bitcoin went up by 900% on an annualized basis. That means $100 invested in Bitcoin in April 2020 would be worth $900 in April 2021. Now, suddenly 30% inflation doesn't seem so bad. If you'd have kept your money in a bank, in cash, your value of that money would be 30% lower. So guys, Bitcoin is a deflationary asset, and it's the best way to combat the inflation that we are going to continue to see in the years going forward. So that's one of the reasons why you should own Bitcoin. If you want to hear about some more of the reasons you should own Bitcoin and other cryptos, be sure to subscribe, smash that like button, and I'll see you in the next video.